What's up, guys? Omar here, broker and CEO of Alden Mortgage and Ome Realty. So this is going to be your mortgage rate update, and we're also going to go ahead and talk about the market. You know what? The reason why you guys watch this show, not many of you, all 63 wonderful subscribers that I do have, but the reason why majority of people watch, because I don't sugarcoat things, I don't lie, I don't make things into something that it really isn't, because you want to know what is taking a really big downturn. Everywhere that you see on the news, what's going down is the real estate market. But you know what you don't see? Who's actually coming in and buying? Well, we're going to go ahead and talk about exactly who's coming in and buying homes now in an influx. Well, this actually has been a big part of my business for the 20 years that I've been in business and in the mortgaging industry. But I'm going to go ahead and let you know who's swooping up homes and buying them. But let's get on with the mortgage rate update. We're going to be pricing out 10 different mortgaging products, and it's actually been not a bad day. It's, everything's on a downtick. Now, whenever we are going to get closer to the 27th, which is going to be the next Fed rate hike, depending on what the feelers are on how much they're actually going to increase, is going to depict how much more the interest rates are going to go ahead and increase. So let's price out these 10 mortgage products. 30-year fix as of 7/19/2022 will be sitting at 4.81%. 15-year fix will be sitting at 3.75%. 30-year jumbo will be sitting at 5.23%. DSCR loan, which is a debt service covered ratio loan. This is a loan product that is mainly for investors that you want to go ahead and get yourself approved and qualified based on the rental income coming up. So the debt would be the total principal, interest, taxes, insurance, and then the servicing would be the total amount of rental income that's coming in, and then the covered ratio. Now the covered ratio is going to be, now typically whenever you are getting pre-approved for this type of loan, you want to go ahead and stay somewhere in a ratio of 1.25 and or above. So to give you an idea of exactly what a ratio is, so let's say for instance you have $2,000 in your mortgage, principal, interest, taxes, and insurance going out, and you have $2,000 in rental income coming in. Well, that will put you in a 1-to-1 ratio, just to give you an idea. Anything more than that, you could go ahead and do the math on it and go from there. That'll be sitting at 8.15%. Bank statement loan, which is a loan product that qualifies you based off of the total monthly income that's coming into your bank statements versus the total debits going out, and then we kind of get an idea of exactly where your income stands off of that, and we don't have to worry about W-2s, pay stubs, any of that good jazz. That'll be sitting at 7.50%. FHA 30-year fix will be sitting at 4.06%. 7.6 adjustable rate mortgage, which is if you don't know what an adjustable rate mortgage is and you don't know what that actually means, it stays fixed, interest only for 7 years. Then it gets adjusted every 6 months after that, according to the rate and the cap on the product. That'll be sitting at 4.85%. USDA, which is a zero down payment program, 30-year fix will be sitting at 4.11%. VA, a veteran loan program, it's also a zero down payment program, that'll be sitting at 4.70%. And then the hard money fix and flip will be sitting at 9.10%. Now, hard money fix and flip loans, those are mainly people who are trying to get into the distressed properties that need a bunch of fixing. You want to go ahead and redo all of them, and then you're going to go ahead and fix it, flip it for a profit. Now, as everybody has seen, the cats, I've been saying this now for a better part of a year and a half now, that this is going to end up happening. Everybody's like, is there going to be a downturn? Is there a housing crash? Is there a housing bubble? Well, the thing is I am not sure exactly what people are talking about when they are saying, is there going to be a housing bubble? Do you think that it's going to be in 2008? Well, we don't know if it's going to be like a 2008 crash, because the reason why we don't know if it's going to be like a 2008 crash is because, well, the mortgage-backed securities are pretty solid right now, right? People are paying their mortgages. The only thing that could give us a big hiccup will be home equity line of credits. Now, home equity line of credits, if the adjustments keep going up as much as they go. So for those of you who don't know what home equity line of credits are, this is a fixed. Majority of people will go ahead and get this one product. There are fixed ones, and then there's the adjustable rate mortgage ones. So it's like essentially like a big credit card, right? So you use the equity in your home as a big credit card. You could pull out as much as you want, well, to the limit that you have. So let's say, for instance, you have about $500,000 in equity to the limit of 80% loan to value on your home, and you want to go ahead and tap into that whenever you want. You want to go on a vacation, you want to do a rehab in your house, you want to go buy furniture, I don't know, whatever it is. You got bills to pay, I don't know. So you get a home equity line of credit. You go ahead and say, okay, Omar, I want a $500,000 home equity line of credit. I'm like, okay, no problem. We'll go ahead and dial that in for you. Now, you don't take the whole $500,000. That just gives you the option to take as much as up to $500,000. So majority of people will go ahead and use this. Now, the reason why I'm even stating this is because the total balance in California right now is about $300,000 total in home equity line of credits, because a lot of people did refinance, but they reapplied their home equity line of credit. They kept on pulling out because everybody is at home. You want to go ahead and working from home, especially here in California, is a very, very big thing. So what people do is they go ahead and pull out. Now the running balance is $300,000. Now, depending on where the Fed rate hike is going to go ahead and ultimately be, is going to depict how bad these people are going to be in their financial situations, because there will be it'll end up being a sticker shock. So you have a 30-year amortized table, right? So your first 10 years on a home equity line of credit will be your draw period, where you could pull out as much as that limit is on your property. Then after the 10 years is up, now you can no longer pull out any money. Now it goes to an adjustable rate mortgage, and the 10 years before that, that's interest only. Then after the 10 years, it goes to principal and interest, and adjust every single year after that. So it's going to be a little bit of a sticker shock if you are paying a teaser rate, let's say at 2.5%. Teaser rate is like what the introductory rate is for you to go ahead and obtain that home equity line of credit, and then let's say it's at 3.5%. Well, what if interest rates are at 7, 8%? That's going to hurt you really, really, really bad. That's one thing we're keeping a close eye on. Now, whenever you are hearing news, everybody knows that everything is on a downtick. Austin, Texas has officially hit pre-pandemic levels as far as, you know, housing inventory goes, housing prices goes, everything like that. California, we're steadily decreasing as well. If you could look at my email inbox of how many price reductions that we have, you'd be shocked. But as far as how much did we actually decrease? We actually decrease in purchase contracts, okay? In pending purchase contract, existing purchase by 20%. 20% total as of right now. Now, the reason why it's 20% is a really big number. Well, yes, the inventory is lower, but the inventory is increasing. Inventory is increasing by a lot. Don't read the news, just listen to me, okay? I'm the guy who actually does this work. I don't read graphs. I don't sit in a freaking little office desk. I go out there and I do it. Inventory is increasing a lot, but these people think that they're gonna go ahead and get the same amount of money that they got during the pandemic, because now we have something that's called panic selling. They're saying, oh my God, I have so much equity in this house. I feel like the market's gonna go ahead and take a crash. These are people that waited a little bit too long, and now they're kind of, you know, in the situation where people are trying to get people buy. They're trying to get people to buy. Now, we have dropped 20%, which is the lowest it's been since, I mean, I'm gonna go ahead and pop up this little graph right here, and you could see exactly the decline. Now, this little yellow line that you will go ahead and see here, this is a total decline in total existing and pending home sales in contract from July 2021 until May of 2022. It's I mean, you can't, I guess I'm really looking at graphs myself too, but you know, you have to kind of do I make fun of people who sit there at the office and, like, you know, you're reading a graph and you're doing this, and I'm kind of doing the same thing, except this is our graph. So I actually trust what I do, because I actually see this. So I know exactly how many homes are for sale in this area. I know how many homes are in sale for LA. I know how many homes are in OC, because I go out there and I look at each and every single one of them. I talk to every single one of them. So this in California, I don't know about the other states, but in California, it is actually not doing too great. Now, people are taking a step back, but you have to look at the bigger picture of everything, right? The bigger picture is okay, who's stepping back and who's stepping forward? The best question. Now, majority of my business, as I stated in the beginning of this video, is foreign money, foreign national programs. They're a really big part of our lending platform. And the foreign buyers are bad. Well, for us, they've never really left. We really dealt really heavily with foreign buyers for the past 2 years. You know, hedge funds and REITs trying to swoop up as many, and private investment firms, they're trying to swoop up as many properties as they can, because even if home prices do come down, you know what's not going to come down? Rental prices. Rental prices will go ahead and stay static, and they'll steadily increasing, because that is one thing that historically has always been on the uptick every single time. I guess it's relative to, like, you know, home prices too, because home prices right now are being a little bit stupid. It's just it doesn't make sense. But foreign buyers, we have been getting a lot of emails. They have been coming back. The number of home buyers that have been purchasing in the last 12 months is 98,600 total existing homes was sold to foreign buyers. Now these foreign buyers, whenever they do buy these properties, they like to hold. They're big fans of holding. They'll go ahead and hold it. Like one firm that we go ahead and deal with, where we do most of their lending for them, they actually have been holding between like 15 and 20 years. And we refinance, and then get them as much capital as they can, because they're not worried about, you know, how much debt they have. They have hundreds of millions of dollars in debt, but they don't care about that. All they care about is what's our total percentage on return, right? 98,600 existing total homes, but that's actually down by 7.9% year prior, and that's according to the National Association of Realtors, which is, it's hard to kind of understand this and how much foreign national money has been coming in, because this has only been something that's been recorded since 2009. They haven't really been doing this too much of anything. So their foreign buyers, they have started coming back between April 2021 and March of this year. International buyers, they bought up $59 billion worth of U.S. residential properties. That was up 8.5% from the year prior. And now that's pretty much from, because, you know, this stupid, God blessed COVID thing is frustrating for everybody. But they saw the rise. Now they're seeing the downtick, and now they're going to go ahead and try to snatch up as much as they possibly can. So that is going to be your mortgage rate update. If you like the content, please like, subscribe, comment for up to 50% commission rebate, 0% listing on selling your current home or any mortgage assistance, any of the mortgage products that I just went ahead and said. Link in the description below. Until next video, guys, I really appreciate you watching. Peace.
I don't wanna waste a minute.